But let's move on then. An important announcement is expected from the MSCI tonight that could have far-reaching impact on emerging markets, particularly India. What's the expected announcement and the impact cost? Well, Vivek joins us to tell us exactly that. Vivek.
Well, thank you. It's an extremely interesting event that's expected tonight, that could actually have a significant impact on India's weightage in the emerging market universe. So positive outcome from this particular event could actually see India benefit quite significantly in terms of foreign fund inflows as well. So what is the event and what's exactly keeping us excited? So today evening, the MSCI will actually announce the 2023 annual market classification review results, and the reason we are watching it quite closely is to see how MSCI decides to classify South Korea. There's a likelihood that South Korea may be put into the watch list for actually going ahead and a recategorization into a developed market from an earlier emerging market. However, we need to understand that the likelihood of such an event, and in case there is an upgrade for South Korea, how will India benefit from such an event? So to give some background, MSCI in fact published in its 2023 Global Market Accessibility Review on June 8th of 2023. However, over here, MSCI did not change any of its previous ratings on South Korea's 18 accessibility measures, which it actually applies to assess market accessibility. However, the review notes that it may only adjust the relevant ratings once, once the proposed measures are fully implemented and tested by international investors. Now, going forward, Nomura notes that it is still possible for actually South Korea to get into the watch list. In case South Korea is put onto MSCI's watch list, the tentative timelines for South Korea to enter into MSCI's developed market index will be over a span of 1.5 to 2 years. Nomura says that an eventual inclusion of South Korea may only be in late 2024. The reason we are tracking this particular event is because South Korea currently actually accounts for almost 12.4% of MSCI EM index, and a reallocation of emerging market money may actually see net inflows into other large EM Asian markets. This implementation will prove to be a net inflow event for other EMs like China, Taiwan, as well as India. Let's look at India's impact. Nomura actually estimates a significant impact in terms of inflows into India and sees close to $26 billion of inflows into India. It is to be noted that this includes both active as well as passive funds, and Nomura also estimates that it may take as long as 7 days of average daily trading values in India to actually absorb this kind of inflows. To break up the total estimated $26 billion inflow, Nomura estimates that active fund inflow may be around $20.1 billion and passive fund inflow may be around $6 billion. Remember, active fund managers are likely to position ahead of the actual inflows, while passive index EM fund flows will only occur much later at the time of actual inclusion.
अब पैसा आने तो हम absorb कर लेंगे.
This is
7 days, 10 days.
But very, very, very interesting. But the only thing is that there is the whether if Korea gets upgraded to a developed market, and then even if that happens, I think the only slightly heartbreaking fact was the timeline. You're saying end of 2024 is when it'll happen, and then the reorientation with respect to India.
Don't be greedy now, Surya.
Okay,
this is like in office
we'll
when you expect your you expect your boss to have a promotion. So
I thought something was coming. I thought Prashant's going to be announcing something big on it.
The closest this I can think of the analogy is like when you have a 1 day holiday in the week or a 2-day holiday, and then you come back the next week and you still want more. So greed is good, guys. Let's not forget that, right? Someone famously once said greed is good.
Should you're getting a truncated week next week, enjoy that. There's a holiday next week. So
next Wednesday, right?
Always on top of that, yes. Okay, all right. Thanks a lot to Vivek for joining.
By the way, we are sounding very cheerful here, but the market is not, Nigel, right?
Yes, the market is still